Friday, actually nearly like at the mid of Friday's session. So I ramped up of what happened, where we're standing right now. So this is a live analysis as usual, okay? So feel free to ask anything you want. I will be here to reply to any questions that you have. Just give me a second to double check that everything is working properly. I can see, yes, they do. Perfect. So both Facebook and YouTube work just fine. Excellent. So, okay, excellent. So I can see your chat. Okay, perfect. So we are ready to go. Okay, guys. Okay, I will start briefly doing a quick briefing of what happened so far, where we are standing. So it was a very volatile week, as you might already seen and noticed. So we have seen, however, since the morning, actually in the very early in the morning, things to change a bit. So remember, we had on Wednesday a sharp sell-off in bonds and stocks, but that actually overnight changed a bit. And so far today, now we're gonna see also the charts together, but Thursday was a day of corrections for bonds, for stocks, maybe for a random of reasons. So actually a bunch of reasons. So one reason might be the already overbought conditions that we have seen in equity markets. Sorry, oversold conditions that we have seen in equity markets. Remember, we had a very sharp sell-off on Wednesday due to the inflation, the inflation from US, of course. Something that actually adding further pressure to the Fed in regards to changing policy, actually to a possible hike of rates much sooner than what was expected. That's why we've seen that sell-off in equity markets. So one factor that could have corrected the stock markets and the bond markets, and we have seen a slight rebound, might be the oversold conditions, as I already told you, but also might be the fact that treasury yields have been recovering from Wednesday's big sell-off. And that might be also, and on top of that might be the US economic data once again. So yesterday we had a jump in headline and core on PPI data, but also a drop in initial jobless claims. I will focus a bit on jobless claims because it was the lowest level since the pandemic hit. Okay, so that boosted a bit the sentiment, actually shifted the attention of the markets to a more reflational trades rather than concerns, at least in the near picture for the day, into inflationary concerns. So we have seen Wall Street manage to move slightly higher. That could follow with Asia session as well, that also recover some losses and continue the European session as well. So the signs of the strengthening recovery, okay, helped markets at least in the near term. But I would like to shift your attention that you should still have in mind. You should still consider the higher than what is actually the possibility of rising inflation. So inflation concerns are still there. They left a bit behind today, but they're still there, and it's unlikely to go away anytime soon. So as we're moving towards a new week, we might see inflation concerns coming back again, and we might continue to resurface, and the inflation might continue to resurface and might lead to more volatility as we're moving into into May and the rest of the 2021. Okay, so other than that, guys, so far today, the economic data that we had, it was ECB monetary policy meeting. Okay, not economic data, it was from ECB, along with the retail sales just now, actually, from the US. So, as I can see over here, we have seen inflation, retail sales from US drifting lower, okay, falling around, that was, I mean, 1.5%. Sorry, I need to shift. Let me show you my calendar so you can follow me. But at the same time, we'll switch on the air condition because it's really, really hot over here. So, calendar. As I can see over here, retail sales dipped to 1.5, so contracted. Let me share my uh, my tab with you. Yeah, excellent. So as you can see over here, we had we have actually, you can see it. Okay, here we are. We have retail sales for April dipping at zeroing actually of the 10.7% seen in March, which revised higher actually from the 9.8%. The consensus has been at 1%, but it's zero instead. The retail sales control group on the other side contracted at 1.5% from the 0.2% expected and well below what we have seen last month. And ex autos the same. So a very pessimistic, negative, as you can see, a very negative data, unfortunately, from retail sales in US. So let's see a bit the reaction that the dollar had. Okay, so even though I wanted to inform you about also the rest of the market, I mean what happened so far today, but since the data have just released, it's a shame not to see the response that we have from dollar. So okay, dollar over here continues extending lower. Okay, so we have seen that since early in the morning, actually. Okay, so we have seen the dollar softening a bit, tracking the ebb in treasury yields, which we have seen the 10-year maturity showing the yield drop back to 1.66% from yesterday's highs. So treasuries affected initially the dollar and dipping lower, but now as we were moving towards the US open and now with the data out, the momentum is looking like it's reinforcing further negative bias. So let's see the 30 minutes chart instead. So okay, we cannot really test it just 4 minutes after the data. So we had an initial dip lower. Right now, it's trying to get back higher, but not with success yet. Okay. But guys, if I just zoom in and check the daily picture with you, which is a bit messy, but let's see it together. Hello everyone, I can see your hello everyone. I can see your comments. Don't worry about it. 2 minutes to show time. I missed your comment, unfortunately. Dollar. Okay, we are on dollar right now. Okay, so yeah, okay. Fall continues. That's clear. As you the fall continues, as you can see. For a second time today on its second support of the day. Oops, what I have done. Okay, here we are. Momentum, as we can see in the 30 minutes chart, it remains negative. Stochastics, which you cannot see my stochastics. Okay. How can I? Okay, stochastics. Let me put it again. It's at the very bottom and you cannot see it. Stochastics crossed the bearish, cross and around 2 hours ago, and they continue extending lower. However, they haven't crossed the 20 area yet, so they don't look yet over. So at least, okay, MACD negative, RSI negative, but since we are in the 30 minutes chart, let's focus on the fast moving average. As you can see, they continue pointing lower. RSI Bolligers keep extending lower, so there is the dollar remains to the downside, remains one of the weakest currencies so far today, affected by treasuries, affected by the reflation trades, as I should probably say it. So we have really seen a continuation of this morning's decline. So okay, we can see that 30 minutes is starting pushing higher again, but it's too soon. We cannot really confirm how this candle will close, because we have another 20 minutes until this candle close. But overall, the intraday picture remains negative. You can see that in the 1 hour chart. You can even check the 4 hour chart. So intraday will still have negative bias in control of the dollar. So that said, okay, let's move on, and we will get back to dollar soon. But before I finish with dollar, let's see a bit the daily chart, because it's what is because it's more interesting. Can you see that the asset failed to move above the 20-day moving average? Okay, once again. So remember, it is below the 20-day moving average since the 8th of April. It managed to retest it several times, like at the end of April, beginning of May, this week as well, with this huge bullish candle, no tail candle, but it failed to break it. Okay, so that strengthens the outlook, the negative outlook for dollar, especially if today closes with a big bearish candle. Because if tonight closes with a big bearish candle, this could confirm an evening star formation, which is a negative, which is a bearish signal. But let's wait and see in regards to that. Let's wait for the closure tonight. But intraday, extending lower for the time being. Okay, so we will return to dollar. Don't worry about it, okay? Let me double check Facebook as well, whether it works okay, whether they can, whether there are any other questions. Hello, Babesh. Hello, Tan. How much profit you make this week? I cannot really tell, guys. We cannot really share and this kind of information, I'm afraid. But yeah, as Stuart keeps saying, risk management. Take care. Always apply risk management before taking any position to the market. Okay, might be the number one rule: emotions and risk management. It might be even more important than having an actual knowledge of what's going on. Okay. So let's move on. Okay, oops. Okay, before I shift to gold, the question from Brian, just because you mentioned gold, okay, it's quite important to explain a bit what's going on with the commodities, okay? So as I said, we have seen treasuries dripping lower, and we have seen a pretty much reflation trade so far today. So that's why commodity currencies and we'll shift to gold as well, just to follow me, so you could follow me, okay? So here is gold. Okay, so we have seen commodities finding overall a bit of support, but steady overall. So commodities and commodity currencies, um, they have been helped, they have been supported by the rebound that we have seen in global stock markets. Okay, um, even though even though we keep explaining that there will be eventually, actually, to the at least to the precious metals like gold, there might be potentially some kind of a pressure, okay, um, because of the rising cost pressure globally, but because also on the reopening of the economy, the attention is really turned to raw metals like copper, aluminium, palladium, industrial metals, the ones that they are used, massively used by industries, especially now that the majority of the world has reopened. Okay. Also, we have seen European markets reopening slowly with some conditions, some restrictions, but a reopening of an economy is a reopening of the economy, and means that manufacturing keep working, services have opened, hospitalization is slowly opening, and in general, the whole economy is starting to reproduce. So these might boost further the raw materials, but because the precious metals are I have been used for inflation hedging, might find some kind of a upside pressure. Okay, but because let's not forget, guys, that we still have ECB ahead of us, Fed ahead of us, so there are concerns that Fed might have to release sooner than what might actually announce sooner than expected a rate hike. Okay, rate hike suggests um, rate hike suggests expensive currency, so expensive dollar. So this might boost indeed gold. But will this be limited? Will not be. Let's wait and see. For sure, in technical side, the gold remains within my regression channel. The bright side of it, okay, is that it has retested this regression channel, this upper trend line, for 1, 2, 3, 4, 5, 6 days in a row, and it's keep the momentum, as you can see, my dear Brian, is keep extending slowly, but it's keep extending. Okay, ignore for now the stochastics because it's my short time frame. One is the one that I use in the 1 hour chart, but focus on the RSI and the MACD. So MACD extending higher, RSI is holding close to 70. Right now it's at 64. So the momentum is slowly increases. But of course, we need a decisive break outside the regression channels in order to suggest that indeed this very long term decline might change. Remember, have a look over here. The regression channel, the upper regression channel, the upper line, coincides with my 200. Is it exponential? I don't remember. So sorry, 50, with my 50 simple week moving average. Okay, so there is this suggests that this area, this 18, 40, 18, 45 area, actually, oops, what have I done over here? Suggests that this is a key resistance area in the medium and the long term, which if it breaks, it will be a very strong long term bullish bullish signal for gold because it suggests a breakout of the 50-week moving average of the nearly 1 year's regression downwards regression channel and the a move and a reversal of more than 38.2 percent of the losses that we have seen for nearly a year now. Okay, so okay, I know that you are my interest in Brian for the short term, what's going on now with gold, but I always show the daily and the weekly picture, especially if we have this kind of rising positive bias in this kind of key resistance areas, key levels. So intraday now, consolidating after it broke earlier today, the medium, the immediate resistance at 1828. The positive, from the positive side is the fact that it has sustained a move above 1800s. Remember, 1800s is a round number, key psychological level, coinciding with the 20-day moving average as well. So it has managed to sustain move above it, above this round number for 1, 2, 3, 4, 5, 6, 7 days in a row. Okay, so that is a key support level now for gold. If it breaks 1800s, if it breaks to the downside the 1800s, it might go down again and retest the medial line at 1729 or even lower. But okay, let's move to the 1 hour chart again. So it managed to break the immediate resistance at 1828, which is yesterday's highs. It broke it decisively on the European Open, but since then it's pretty much consolidating. It is consolidating, but as you can see, RSI flatten, okay, but stochastics, because we are in the 1 hour chart, so stochastic, my fast stochastic, it just turned lower, pointing slightly lower, so we might see either a continuation of consolidation or even a correction similar to what we have seen over here, a correction down to 1828 or even lower. But what could confirm such a pullback, it would be the break of this floor of here at 1831.50. This is for the 1 hour chart, dears. Let me put the pivot points on just to confirm. Yeah, indeed, it broke the first resistance of the day, so a move below 1831 could open the doors to a retest of the pivot point for the day. Okay, even though the intraday picture remains positive with the asset posting higher highs and higher lows. Okay, so that was on gold. Let's move on. Pound yen. Okay, pound yen. Yeah, I fancy pound yen, to be honest. So yeah. So pound yen, one of the most volatile assets, as I keep saying. Okay, let me find it. Carlos is saying dollar is up. Did something change? No, it's not up, I'm afraid. It's keep extending lower. It was a negative reading. It was a negative reading. I would be surprised if it turned lower. Don't know whether we have Michigan still in an hour. So yeah, if Michigan indeed comes in line with expectation and rise, that would be good for dollar. It could support the dollar. But for the time being, the retail sales have been quite negative. So they might add further pressure. So gold is banking on a 1330 support instead of bumping. Is banking. Why are you saying that, dear? It's sideways for the time being, at least. We need let me get back to gold since you keep asking about it. Let me check again. Yes, indeed, a big tilt to the upside. Let me go to the 30 minutes chart. So, yeah, it's actually consolidating around the first resistance of the day, but we have seen some kind of an upward trajectory, smoothing one, but yeah. Okay, yeah, a bit of consolidation, retest around first resistance of the day. Stochastics in the 30 minutes chart is a bit neutral. RSI is neutral. Yeah, consolidation remains it because even the fast moving average in the 30 minutes chart haven't really clarified direction. They point to the right hand side, something that suggests consolidation. Um, it's not good to trade on Friday. Okay, depends of your strategy, depends of your time frame, but it's definitely good to check the markets on Friday to see how they closed on Friday in order to get prepared for Monday. Okay, by checking how the weekly candle closed. Okay, you will have the overall picture of every single one of these assets. Okay, so it's definitely good to check the markets on the close. But yeah, in regards to trade on Friday, depends on your time frame, depends of the asset, depends on the strategy. Okay, they are consolidating today, but I don't think the consolidation affects at least the people that are trading very short time frames. But that's not the case. Yeah, yeah, there's a lot of consolidation. It's this uncertainty. Inflation trades, end of the week, people closing positions. And so, yeah, a lot of indecision, concerns in regards to inflation. And this is what it's really explains the sideways movement. So you ask about pound yen, and I would like to focus on pound because it's quite interesting. Okay, so pound yen. Okay, pound yen. This is the daily chart. It broke actually on the broke the how many? I think it's. Let me just find it. So it broke multi-years, actually more than 3 years territory, okay, and also March highs back in Monday. So on the open Monday, we have a boost crossing above the 153.30 area, which was our key resistance area, and it closed above it. And so far, the whole week, it managed to be sustained above that previous high. So, why we have seen pound benefiting? So there are a lot of reasons. Other than that, the UK economy, the fact that there are signs that the UK economy is growing. Other than the rising confidence indicators, inflation indicators that they are moving higher in UK. Other than the fact that the vaccination program is doing great, and by June they might manage to vaccinate nearly the whole population. Other than all this, don't forget that we have the elections, the local elections. So the fact that the SNP the SNP party hasn't really taken the majority. So we have seen that means that we won't have any referendum in regards to the Scottish independent anytime soon. This has boosted pound, has occurred a buying sentiment for pound. So we have the UK economy, which is building up. Okay, we have the fact that the referendum has been avoided for now. Okay, so because of the failure of the SNP party, we have the vaccination, which is doing great. Brexit is out of the way anyway, since the official Brexit. So all these are actually boosting sterling against other majors. Okay, so over here we had the key breakout, sustains momentum to the upside. MACD is building up. So the overall outlook for pound and from UK economy is positive. Now, let me go down to the 1 hour chart. So we have seen the pound, actually, let me set up my 5 and 9. Here we are. Okay, we have seen it so far today ranging, consolidating between 153.60, 154. That was the high of the day that has provided support so far today, and we have 154 as resistance area, which has been also which has been a resistance area yesterday on the US Open as well. But we have something interesting over here, and thank you for bringing up uh, uh, the pound yen rams. So my fast moving average over here, they have confirmed this kind of a bullish cross of my fast MAs, pointing upwards. It broke the pivot point. It posted a new high for the day at 154, which we have this latest up fractal, but it is a fresh high for the day. And the next resistance to be seen is 154.23, which is the first resistance of the day. So according to fast moving average, we have bullish momentum on in pound yen. MACD, however, is a bit mixed, is steady sideways. Let's put stochastics as well. RSI appreciated is extended above 50, is at 59 right now. And stochastic, I'm not sure whether you can see it. Let me extend it a bit. I think now that you'll be able to see stochastics as well. It At the same time that we had this cross, we had also an extension and a bullish cross of stochastics, and it's still pointing upwards, while there is further area to be covered until it reached above the 80 territory. So some bullish momentum has been noticed intraday, with key resistance area, with next resistance area, not key resistance area, next resistance area, 154.23. Who asked about pound yen? Yeah, it was Lefuka. Yeah, it was Lefuka that bring up pound yen. So yeah, on the breakout of 154.23 is the next resistance area, and the very next one, is the 154.43, or an even better one is at 154.30 because it was retested several times this week. According to ATR, though, let's check ATR. Here we are. ATR in this 1 hour chart saying is at 0.16. So let's see whether this has already done 0.16. So far we have just 4460. So according to ATR, we already have this move. Let's see the daily picture though. The daily ATR suggests 98 points movement, which so far today it managed to cover the half of them. So let's wait and see whether it will indeed move another 40 pips according to the daily ATR. So that was on pound yen. You keep asking about gold, but I think we have covered it. Why Bollinger Bands? Why didn't mitigate? Sorry, in which asset? I'm quite confused now. I'm quite confused where you haven't seen it mitigating. If you're referring to pound yen, you're actually right. is retesting the upper Bollinger, but we don't see an, an extension to the upside of Bollingers, and that really strengthens the possibility of keep consolidating between 154 and 153.60. But the fast moving average keep extending higher, and it has opened above 54 right now. So yeah, let's see. So what about Aussie yen? Aussie yen, commodity currency. Okay, Aussie yen. Okay. Oh, looks like okay. So let me put the daily, the 5 and 9, excellent. So cross the 200-hour moving average, posted the bullish cross of the 5 and 9, retesting the first resistance of the day for the first time after broken all the moving average that we had. MACD's neutron RSI is at 62. Upper Bollingers are extending higher, so there is still some positive bias, but the fact that RSI has already steadied, can you see that? Suggests that this boost might be limited. Let's check also stochastics. Yeah, stochastics already turned above 80, so they are already in the overbought territory. So it might find some resistance over here. We need definitely a more decisive hourly candle in order to suggest that it will go up to the first resistance to the second resistance of the day. For the time being, we have a bullish momentum, but looks to be limited. Looks to be limited with stochastic already above 80, RSI flattening a bit. Bollingers are very, very close to each other. They haven't really mitigated, as stock vision saying. So yeah, there is bears are still there, and there is a big fight. So yeah, there is still lack of confirmation in regards to further and to potential break of this level and extend further to the upside. Yeah. So 30 minutes chart. Let's see the 30 minutes chart. So we tested RSI. It's above the 200. Stochastics have flattened, RSI have flattened. So yeah, this boost might running out of steam because it happened. Actually, this bullish cross, this sign was like nearly 2 hours ago. So we might be a bit late. So yes, let's move on. Let's go to cable, guys. Uh, let's see cable. So cable, we have seen that in general pound has been a good performance so far, so remains in a strong rally, sustaining, as you can see, the gains, the territory of the week, even though we have a big blank on Wednesday. The is trying to recover, is holding a nice floor above yesterday's lows and above this multi-months, actually more than a month territories, resistance area that now has been converted into a support area. So sustain above this level, and so far today managed to recover some of the losses that we have seen on Wednesday. So off its lows, moving above the pivot since the beginning of the day, nearly since the European Open, keep extending higher. Fast MAs are keep pointing upwards, even though MACD is flattened. RSI turning slightly below. It was is actually it keep the RSI is keep extending higher, but let's see stochastics as well. Yeah, stochastics. So Oasis is at 80, retesting the 80 territory after it rebounded in the Asia session. But similar to pound yen, the fact that, and you see that even Bollinger's, even RSI or stochastic, they starting turning lower. So this boost might running out of steam. So take care, guys, because we had some rallies earlier, intraday at least, but as we moving towards the end of the day, it it lacks of momentum. So yeah, that looks to be ready to correct a bit or put back or sideways just to ease a bit, because yeah, Bollingers are like pointing to the right hand side. Fast time is the same. Stochastic, they have they have lose their slope to the upside. They're a bit sideways again. Not sure whether you can see it. If not, I will extend it even more. You see that they point to the right hand side, failing to break the 80 level. RSI also starting to slow it down. So yeah, this might have run out of steam. This is the 1 hour chart. Let's see the 30 minutes chart. Yeah, okay. Up, up, up. We have another 20 minutes until this candle close. So yeah, momentum again. The stochastic again is turning lower. RSI is also turning lower. As you can see, is pointing lower, so this might run out of steam again. That was pound. Let me double check whether I'm missing something about pound. But as I keep saying, have in mind that the overall picture remains positive, very well supported by fundamentals, by politics, and even by the fact that actually the sterling has built some kind of a pandemic era relationship. So that is something that supports the pound as well. So is the pound is being the currency of an open economy. Remember, the UK opened since the beginning of April, if I'm not mistaken. So it's the is being the currency of the open economy, running a large balance of payment deficits, something that is strengthening against the other majors. So let's see, let's see. So that was guys. You can ask anything you want. By the way, I'm here to help. Is Dow Jones about to decline or still consolidating? Okay, let's shift to stocks then. Yeah, why not? Where is my dollar index? There it is. Dow Jones. Excellent. Okay. Actually, Dow Jones and S&P 500 have been the ones that they have been the ones that had a boost, a nice boost. This S&P 500, you can see this boost, today's boost after the Thursday's recovery. So it continues so far today. The same stands for Dow Jones over here, recover significantly on Thursday, and it kept those gains and keep extending so far today, breaking and moving above the 20-day moving average. So right now it has posted a 34,200 high for the day. But let's see a bit the daily picture first. Okay, it remains of course in a very long upwards trajectory. Okay, overall the long term, the stocks, the US indices, the major indices remain in a rally. Now, in regards to the medium term now, the daily picture, we have this rebound, retested the 50 exponential moving average, day exponential moving average over here in the bottom of the Bollinger. But can you see that Bollingers have been flattened completely, and that MACD has turned lower below signal line, suggesting increasing negative bias in comparison with the bullish bias. RSI is stacked at 50, so daily picture remains in a consolidation. Okay, stays remains in a more neutral zone, neutral outlook. So only if it managed to break today, okay, actually to close very close to the 50% retracement level, so 34 200. If it did it close over there or even better above it, then we could see a reversal and a boost up to the upper Bollinger, which is at 34 nearly 700, or even higher at the 35,000 over here, the high of the previous week. Not previous week, was Monday, right? Yeah, on Monday. So only if today managed to close on the 50% or even above the 50%, then we could turn our attention to the 34,700 or even higher, the 35,000 territory. Now, because yeah, there is a mixed situation over here. The Bolligers have flattened. Overall picture, the long-term picture remains, of course, positive, but the medium term, so the daily time frame, has suggesting a neutral outlook. RSI has flattened, Bollingers have flattened, completely flattened. So yeah, we might see a bit of consolidation. Let's wait and see. Intraday now, yeah, consolidation it is. Like very weak candles, lack of volume, lack of direction. So I'm not sure what I should tell you about this Lefuga, but it's consolidating. It's consolidating. MACD has flattened, RSI has flattened, stochastics has flattened. It needs, okay, if you are interested in a 1 hour chart or even 30 minutes chart, okay, it needs to break that the that so right now, okay, if I let me clear a bit this mess, let me get rid of, okay, this will look better. So for the whole day is consolidating between 33,996 low and 34,203 high. So only a decisive break above this high could open the doors further to the upside for the day, for today, or a quite decisive break below the first support of the day, below the 33,996 level, in order to suggest a downwards pressure. For now, it's very low. The volumes are very low, very small candles, lack of volatility, lack of direction. Not really a fancy one. Yeah, everything has flattened. Can you see how narrow these Bollingers are? Yeah, consolidation. This is what the technical analysis is telling us. So, guys, I'm really not. I'm lacking out of. I'm running out of steam. So it's time to ask questions. Okay, I'm here to reply. Let me see if there are any on Facebook. New Zealand dollar from Fefane. Okay, New Zealand dollar, of course. New Zealand actually is one of the biggest gainers so far today. Let me find it. New Zealand dollar. Here we are. Okay, excellent. So, New Zealand dollar has been one of the biggest gainers so far today. Okay, so on dollar weakness, we have seen New Zealand benefiting, and as you can see, managed to break even the second resistance of the day. So yeah, actually, let me check. Let's have a quick look on. Yeah, keep extending. Dollars keep extending. Okay, let's get back to to New Zealand dollar. So why is that the case? Because of commodities. Commodities are higher. Let's not forget that all this positive, all this positivity around the growth, on the reopening, on the industrial protection, something that boosts the commodities higher. So that's why a commodity related currency such as New Zealand is edging higher as well. So he has been the biggest mover so far. Let me measure this move. 63 pips higher than the pivot point for the time being. Okay, so and one reason for appreciation of commodities and these commodity currencies, New Zealand, Aussie, gold against dollar, other disappointing, um, disappointing retail sales, US retail sales, and the falling dollar has also been the fact that a key transportation bridge across the Mississippi. I'm seeing in my newsfeed right now. So a key transportation bridge across the Mississippi is closed in both directions in Memphis because of a crack in a steel beam. So this has boosted commodities to the upside, um, while stocks remain to the higher on in pre-market trading. U.S. treasuries remain supported. So yeah, New Zealand, the pick of the mover of the day, the biggest gainer so far today. So, my dear Morris, because you asked, it already broke two resistance level. Fast moving average and keep pointing higher, but let me use stochastics as well. Okay, stochastics has flattened on RSI on above 80. Everything suggests that there is still further steam to the upside, but let me check the 30-minute chart just to confirm whether there is still some momentum. And apparently there is. The fast moving average keep pointing upwards. RSI is MACD still keep extending. RSI is still hasn't really show any reversal. Can you see that it's keep pointing upwards, like there is further area to be covered? And on the other side, stochastic is not ready to return either. Okay, let's put a bit of a line over here, connecting the lows and connecting the highs. Okay, the highs wasn't necessary actually. So yeah, this could help us to see, to spot any reversal. Okay, sorry for that, guys. Sorry. No, yeah, the one that I just posted was the best one. Yeah, yeah, it's not ready. Stochastic and RSI. It's not ready to turn yet. Seems that there is further steam because we have seen the bolliges are not lacking. They are extending to the upside. So the momentum is still there. Uh, but for the very, very short time frame though. So take care. 50 minutes chart still extending higher, finding some corrections, but still pointing higher. So yeah, there are still some momentum. This 4-hour chart, there was the bullish crossover here, extended above the 20-day moving average, broken the 20 period moving average and the 250 period moving average. It decisively broke it, and these two 4-hour candles have been quite decisive and nearly full body one. So yeah. And they even recovered, that's very interesting, they even recovered more than 50% of the losses that we have seen this week. So next level to be seen for New Zealand will be the 72.65 territory, because there is still some momentum, positive momentum according to RSI and according to stochastics and MACD over here. That is further steam to the upside with next resistance to be seen at 72.65 if it managed to break that 61.8 Fibonacci level. If you are trying to find out shorter and immediate resistance level, then these two fractals could give you an immediate resistance level for the New Zealand dollar, which sits at 0.7250. What is the next entry level position? I cannot tell, guys. I cannot tell. I'm analyzing it for you, and you need to take your own conclusion. You need to do your own conclusions. So, okay, I cannot see any further questions. I need to call it a day then. I will finish with Euro. Actually, let's finish with Euro, and I'm not sure whether we have seen oil. We haven't seen oil or any cryptos yet, right? Yeah, we haven't. Okay, let's finish with oil and euro. Let's see euro first, which advanced significantly today, broken the 121 level, round level 121, which also coinciding with the first resistance of the day. It extended to the second resistance of the day, and it kept pushing higher with fast moving average pointing higher, Bollinger's extending higher. ATR suggests 12 points movement in the 1 hour chart. RSI, as you can see, pulled back slightly before the on the EU Open, but then right now it's once again retesting the 70 level, and you can see how strong these candles are. They keep pushing higher. MACD is positive, and stochastics. Let's have a look on stochastics as well. Again, it's retesting. You cannot really see it. Let me do it for you. It's retesting once again the 80 territory, having before posted a bullish cross over here. So there is a lot of steam to the upside for euro dollar in this 1 hour chart, boosting, breaking the previous high, breaking the second resistance of the day. So the next resistance is 20 pips higher for euro dollar, guys. I will finish with oil, okay, which has been appreciated since yesterday afternoon. We had actually what appreciated the oil. It was the rising COVID cases in India, more precisely, along with the along with the fact that remember the colonial pipeline, which had the attack on cyber attack, has started to produce again. So that boosted slightly. Oil is retesting the 50 period moving average in this 1 hour chart right now at 64.70, which is a near-term resistance because it's a 50 period moving average, but also is a resistance that has been seen yesterday morning as well. So a break of it could retest the 65.36 level, okay? While, let me check a bit what's going on. While, yeah, that could bring it back to the 68.8. But have in mind that if indeed tonight closes above this 64 65 territory, this 50% retracement level, then that could suggest another attempt to the 66-65 double top resistance area. If tonight it closes above the 50% retracement level, which sits at 64.85, if it closes above it, then we might see next week the asset appreciating more and retesting again the 66.60, this double top formation that we have seen so far in May. So Okay. There are some questions. Let me check. So, okay, that's an interesting one. And let's get back to the stock market. That's a very nice question, my dear Rams. Besides the reflation trades, hedge funds, as you call it, what else caused bullish and bearish trends on stock markets? Okay, there are random there are a bunch of stuff that could affect the stock markets. To the bearish side, okay, let's start actually mainly, okay, because there are other stuff that affect the stock markets bearishly, and there are other stuff affecting the stock market positively, bullishly. Um, we had earnings season. Let's not forget that. That's why we have seen that was one factor that the stock markets have been appreciated. Especially from some strong gains that we have seen from big gigantic companies. We have also it's been also affected by COVID, by central banks, but just to simplify your questions and to simplify also my reply, you should really worry about treasury yields. Whatever happens in treasury yields, it will affect the stock markets. They are negatively configured, they are negatively correlated, okay? So uh, um, we have seen this this pull back down, okay, this week, okay, this extension lower, okay, on the inflation data, and also on some negative earnings, and on the profit taking opportunity, because we have seen last week the Dow Jones, for example, or S&P 500 posting another record high. Okay, so this triggered at the beginning of the week profit taking, so people wanted to close their profit positions, to take their profits, because they thought that the asset is overbought. So this, along with the concern in regards to inflation, ahead of the inflation data that we had on Wednesday, but also on the solid inflation, on the big jump of inflation in the US, drag the Wall Street, and in general the global equities lower, okay, because the higher the inflation is, the more the probabilities are for the Fed to increase interest rates. Okay, so all these worries in regards to hotter than expected inflation, sooner than expected rate increase of rates from Fed. This added pressure to the stocks, because also it supported and gave a boost to treasuries. So on this news, on these speculations, treasuries they were moving lower, but they are negatively correlated with stocks. So that's why we have seen stocks and bonds moving lower. That's why we have this negative, this sell-off. Okay, even though the Fed speeches, a lot of officials, they keep saying that, okay, don't worry, the inflation is transitory. This didn't manage to calm down the markets, didn't manage to soothing the market participants' worries in regards to the inflation. That's why we had this sell-off. Now, why it has been rebounded since yesterday? Oversold. Can you see that was outside Bollinger's, retesting this 50-day moving average that has well supported, for example, the S&P 500 over here since October 2020. So oversold conditions kept kept some sellers to boost some sellers to close positions. Okay, one thing. This is the one thing. Other than that, the the jobless claims yesterday, they were were back in they were the lowest level since the pre-pandemic, so that helped a bit the market to ease a bit, to calm down a bit, and to believe again in the recovery story. But this looks to be a more technical rebound, okay, because it was oversold. Okay, so that looks to be like a deep buying situation over here. Okay, buying the deep situation over here, if we can tell it, because it's the end of the week as well. So that might be also something that boosted stock markets, at least for yesterday's and so far today, to appreciate. But as I said, the inflation worries won't get away soon. Okay, so the overall picture uh, waits on the sentiment. Okay, waits on the sentiment. So even though this rally had some underlying drivers that they supported this rally, is the strong and broadening recovery expectations, because we keep seeing vaccination programs to continue. However, we need to keep an eye on the Fed and on the data. Of course, a growth could support the stocks. But if we have again another economic data or any comment from Fed that implies to higher inflation, to rising inflation, and to a potential rate hike, then we might see another sell-off. But for the time being, we have seen a rebound, even though momentum is declining, but it's not yet negative. It's still above zero. RSI is neutral, so that's why you should focus tonight on the closure. A closure above the 50% of this decline could help the markets next week to retest the previous high for the US equity markets. But to reply to your question, stocks affected by treasury yields and whatever the economic data suggests in regards to inflation and the next action from Fed. It's all about the speculations, it's all about the sentiment after all. Yeah, hopefully I replied to your question. Hey Maurice, hey Hoy, okay, hey Delta. So guys, if there is no other question, I need to call it a date. I will double check Facebook whether there are any other questions. There are any questions in Facebook, unfortunately. So I need to call it a date. Thank you very much for attending our weekly weekly ramp up, as we call it. So hopefully I helped you. If not, your feedback is very well appreciated. Let me know what you need. Let us know what you prefer to see, and we'll try to improve ourselves. Okay, so have a great day ahead. Take care. Watch the closure tonight. Have a great weekend ahead, and we'll talk again on Monday. Thank you very much. Hope you have a great day ahead. See you later. Bye bye.